Japanese stocks led losses in Asian markets on Monday, with the Nikkei plunging more than 2%, slipping below the 39,000 mark, while the Topix was down around 1.9%. That's as Japan reported revised data showing the economy expanded 0.4% year-on-year in the final quarter of last year, averting a technical recession. Provisional data last month had shown GDP contracting 0.4%. It was helped by an upward revision to business investment from an initially reported 0.1% decline to a 2% jump. But private consumption, which accounts for about 60% of the economy, shrank for the third straight quarter. Separately, in China, data showed the country had returned to inflationary territory after 4 months of deflation, with the consumer price index climbing 0.7% in February. Okay, let's get more on this now with independent market strategist Mike Ingram. He joins us now from London. Good to have you back with us, Mike. We know that the revised figures mean Japan escaped recession. We still saw stocks plunge. Why are investors still nervous about the economy?
Well, I think there are a few things about the fall in markets that we've seen. First of all, is that the Japanese stock market's done very well this year. It remains the best performing major stock market. So, perhaps actually a slightly disappointing data release was a prompt for a bit of profit taking, even though there was this upward revision to the fourth quarter GDP number. The market was expecting 0.3% quarter on quarter. What they got was 0.1% quarter on quarter. Also, as you mentioned, you look at the composition of that GDP number. It really was down to investment. It wasn't down to consumption, household consumption, which has remained sluggish. So this idea that we're going to see some big wage increases, big wage settlements come through, and that's going to both support growth and inflation, I think there's a question mark over that. So if you look at the current thinking about where interest rates are going to go, it's about a 50-50 call at the moment in terms of the March meeting, probably perhaps something like 80% for April, but it's not a done deal. Remember that the threshold for interest rate rises in Japan is very, very high. The Bank of Japan was under intense pressure last November to raise rates to defend the yen, and they didn't do it. So let's see how the data unfolds. I would say on the basis of the GDP numbers that the outlook is actually quite mixed for sustainable 2% inflation recovery.
Yes, and even though these latest figures show that Japan narrowly avoided recession, it still hasn't been able to reclaim the title of third largest economy from Germany, which it lost in February. As you say, everyone's waiting to see what the Bank of Japan will do vis-a-vis interest rates. But are interest rates enough to really recharge the Japanese economy? What will it take to reclaim that number 3 top spot?
Well, I mean, it's obviously demographics in Japan are working against them, as indeed they are in other countries such as China now. So that's going to be a bit of a headwind to any GDP growth number that you're going to see. Really, you've got such deflationary mindset embedded in Japan households. Is that it's very difficult to make them go out and spend, even though you've had negative nominal interest rates. I mean, you've got to remember that the policy rate in Japan at the moment is minus 0.1%. You've got yield curve control. The 10-year bond is anchored at 0%, and yet people still aren't spending. And it's very, very difficult to actually get that mindset, break out of that mindset, which has now been in place now, arguably, for 30 years.
Meanwhile, in neighbouring China, we saw consumer prices rise for the first time in a while. That was thanks to the Lunar New Year holiday spending boom. What's your outlook for the Chinese economy?
Well, as you say, it was a positive news in terms of the inflation front, because a lot of people had thought that the rise in inflation during the February lunar holiday was likely to be pushed up by food prices, but actually food remained in deflation. And as you say, there was this surge in domestic tourism, which did boost the number. However, I would point out that, we're likely to see actually a fall in inflation in March, now that the holiday is over. And also, if you look at producer prices, which feed into the CPI number effectively, so it's the cost push side of it, the producer prices are actually, the inflation rate is falling there quite rapidly. So I think yes, it's a positive inflation number. It paints perhaps a slightly healthier picture for the Chinese consumer, which needs to be on board for a sustainable recovery in China, similar to Japan. But on the other hand, I don't think it's going to change the path of monetary policy. I still think we're going to see further reserve rate requirement cuts from the PBOC. I think we're still going to get a cut in the 5-year loan prime rate later on this year. So, more care and attention needed from policymakers in order to foster a more sustainable recovery in China also.
Okay, Mike Ingram, we'll leave it there for now. Always great to get your take on things. Thanks again for joining us.
My pleasure.
Now let's take a quick look at some other top business stories from around the world. Saudi Aramco has reported a steep decline in annual earnings due to lower oil prices and state-led production cuts. Net profit fell 25% from a year ago to around $121 billion, down by 25% from the record $161 billion in 2022. But the state oil giant has still boosted its dividend by 30% to almost $100 billion. South Korea said it has restarted procedures to suspend the medical licenses of 4,900 junior doctors who have ignored an ultimatum to end a walkout. Last month, thousands of trainee doctors resigned in protest against government plans to increase medical school admissions, causing chaos in the country's healthcare system. Doctors who defy orders to resume work can be punished with 3 years in prison. And AI chip maker Nvidia is being sued by 3 authors who said the tech giant used their copyrighted books to train its artificial intelligence platform. Brian Keane, Abdi Nazaman and Stuart Ozan said their works were included in a dataset of nearly 200,000 books that helped train Nemo without their permission. Other AI giants, Microsoft and OpenAI, also face similar lawsuits.